Good morning and welcome everyone to the Moneycontrol live stream. You're watching Markets with Santo and CJ in association with M Stock by Mirae Asset. Well, after snapping a six-day losing streak yesterday for the Nifty and Sensex, we are looking at another positive start on Dalal Street this morning. If you look at the Nifty Futures on the SGX, it is indicating a largely positive start on the back of positive global cues. The Asian markets have started on a strong footing, tracking likely the surge we are seeing in the US stock futures ahead of the opening of Wall Street later in the day. Remember, yesterday the US markets were shut in relation to public holidays. Clearly, a lot of the cues are coming only from the futures market at this point of time. Apart from that, Santo, clearly we could see some sort of short covering, although yesterday benchmark indices did rise or ended in the green, but the mayhem clearly was in the mid and small cap space, and it'll be interesting to see if that carries on today.
Well, CJ, one number clearly says it all, the kind of, despair among HNIs, retail, as you may call it, Yesterday's fall seemed to indicate that FIs would have sold very heavily, the kind of carnage, but at the end of the day, the net figures were barely about 1200 odd crore, and
Right.
we're also seeing mutual funds now kind of, their purchases too seem to have slowed down. So much of the selling which happened today, it's largely unwinding of position by HNIs, and I think they are beginning to throw in the towel.
Yeah.
That said, the market has been falling for a while now. It's fallen many days in a row. Some bit of short covering is already being seen in frontline stocks. Maybe you could see some bit of short covering come in the broader market too, but it's again unlikely to sustain. The mood is clearly very, very bearish at this point in time. Even if you see some kind of pullback rallies, it's most likely to be an invitation to sell more stocks.
Possibly, I mean, a lot of people who have definitely got into the market this year would be looking at an opportunity to sell at every rise. It seems like that is the sort of market at this point of time, and taking long position has become, a daredevil's game at this point of time. I mean, you have to have a lot of risk appetite.
And
to
just
take
look
long
at this,
positions.
down the mutual fund 1 year returns have started turning negative.
Yeah.
That's very, critical point. That's when many investors start thinking whether they should be continuing with their SIPs. I mean, it's good to say that continue with SIPs in the long term, they'll always give you return. But when you see that kind of negative numbers for all the returns made over the last 1 year just wiped out in a month, that does give second thoughts to many people.
Yeah, exactly. I mean, it will be interesting to see how retail investors react to all of this, because they have been clearly the pillar of strength for this market for the past 1.5 years, 2 years now. And so far, it has continued. I would not say that they have totally exited the market, because if that was the case, we would have seen probably a even sharper sell-off that we have seen so far. But clearly, there are now doubts emerging in the market whether the retail inflows will continue over the next 6 months. And if they give out, then what happens in the face of almost $500 million worth of selling every day that is coming in from FIs?
Maybe FIs will turn bullish on the market then.
Maybe that is possible. Maybe FIs are ultimately playing the right game. Who knows?
Yeah, but you're seeing, if you look at the headlines in papers also, it is raining bad news.
I think it's
at
time
this
to
point
buy probably. I think it's time to probably
May
take
not,
the contract.
yeah,
trade.
it's time to buy probably, but you'll have to buy knowing that this is going to take some time. So you would be buying more from a 2 or 3 year perspective, and in fact many market experts are saying the same thing. It's a good time to build a portfolio, but keep be patient. It will take some time. The kind of bull market that you saw, every stock running up 5% almost every other week, that's clearly ended for the time being.
Well, talking of portfolios, clearly there are a lot of stocks to talk about, starting Santo with
Tata Steel. Now, yesterday was a terrible day for commodity stocks in general, led by Vedanta. Now, Tata Steel, lot of short positions being created. If the stock futures has slipped into the negative compared to the spot price, so maybe CJ, you could see some kind of a temporary pullback there. But I would say
Fingers crossed.
what I would say that the near to medium term outlook on the stock and all steel stocks is negative at this point in time. City brokerage house City has cut its earnings estimate. EBITDA estimates by almost 30 to 34% for this year and the next, because it sees realizations being lower. But that being the case, CJ, when there's a serious cut to earnings, not to mention that it's also slashed its target price from about 1800 odd to about 1100, you are unlikely to see the stock running away anytime soon. There could be a pullback for sure, but I see the stock probably drifting lower near term.
Well, for me, Santo, I mean, the stock has corrected over 56, almost 60% from its record highs earlier in the year, and clearly at this sort of, after this sort of correction, I mean, and you have to look at the overall picture for Tata Steel, not just only the macro environment, but also what the company itself is doing. I think it begs the question whether the stock has turned attractive now for those who are looking to play a 1 to 2 year or 3 year cycle going ahead. If you look at it from a demand perspective, yes, the biggest knockout punch for the steel sector was the imposition of the export duty. Clearly, the export market was what was driving demand for a lot of these companies, even as the Indian market was recovering. But there is still hope, right? China is still trying to get out of that COVID situation, and there has been assurances from the central bank as well as the government that they are going to provide a lot of stimulus to the economy to help it recover from the COVID lockdowns. And clearly, I think that is one joker in the pack when it comes to steel stocks, Santo. If that stimulus does come in over the second half of the year, I think steel stocks could probably see some sort of a bounce back on the back of that. Apart from that, if you look at, in the same report that you talked about, Citigroup, they stated that balance sheet position for Tata Steel is the strongest perhaps in the last 15 years, right? Now, that tells me one thing, that even if the company goes for capex going ahead, and they have indicated that they want to do some more capex at the Kalinganagar plant and other areas, clearly I don't think that will be as much of a burden on the company's balance sheet as probably it was in the previous cycle that we saw between 2003 and 2008, when the balance sheet bloated so much that it could not sustain it at those levels. And I don't think the company is unlikely to repeat the mistakes of the past of unfettered capex, going by just the optimism that is on the ground, and you keep on adding capacity and capacity after capacity. I think they will be probably a bit more strategic about capacity addition. They realize that the market dynamics have to be in their favor for it to work in the longer term. So clearly one stock that is really looking attractive after the sort of correction we have seen.
Short point, I think if steel prices stay low, demand remains weak, capex is going to be a very long drawn out story.
Yeah,
the story is over for the time being, I would say.
In the short term, things definitely don't look pretty. One stock where, of course, you have seen similar sort of a correction, even though the fundamentals speak a different story, is DLF. Clearly, I feel that Santo, this is one stock that probably has been done a little hard by the market, given the sort of comeback that the real estate sector has made and DLF has made itself. I mean, the near-term earnings outlook clearly remains still quite strong. If you go by the management commentary, if you go by the March quarter earnings, clearly they are quite optimistic about the business side of things, even if the stock performance has not been very pretty. If you look at the fundamental side, clearly there is indication now that prices are rising for premium residential properties out there. Apart from that, office occupancy is clearly rising. Although there have been renewed smaller waves in states like Maharashtra of COVID, but clearly overall we have an indication that the economy, people are coming back to offices, the office occupancy level is rising, and that is quite good for DLF going ahead. So clearly these are two things that are going to affect the earnings of the company and going to aid it in FY23. Apart from that, the company has promised to continue the debt reduction that it has been doing over the past 1 year. All of the money that they have made over the past 1 year, they have tried to utilize it to bring down their debt on the balance sheet. And clearly that is one journey that DLF will continue to do. And given that the company is trying to reduce its debt, I don't see why investors would have any points for complaint from a company from a fundamental business perspective. Clearly, valuations are a different ball game at this point of time, given where the market mood is. But one stock definitely worth considering.
Well, I agree with you on the fundamental side of the story.
Yeah.
In fact, the management has been making the right kind of noises and also doing the right kind of thing. But this completely beats me. And you mentioned the same thing, that the stock has been hard done by.
Yeah.
The market simply doesn't seem to be willing to give the benefit of doubt to the company. If you look at a very long-term performance of this company, dating back all the way from 2008, it had come up with a big IPO,
Yeah.
then collapsed, and it's never really recovered from that. For almost, if you've been invested in the stock for almost 13 years, you wouldn't have made money unless you were constantly trading in and out. This despite there being periods when the outlook on the real estate sector was quite positive. despite that, the stock price has not really delivered. So that is what makes me, somewhat skeptical about this.
I understand your skepticism, Santo, but I just feel that a lot of those skepticism that you probably and the market also shares is just uncalled for at this point of time. I mean, you have to go by what is in front of you, and what is in front of you, what DLF is representing at this point of time, looks quite good. If you talk about on a relative basis to what a lot of other sectors have been experiencing at this point of time. So clearly, maybe one stock that maybe the market's view will turn around the moment the market itself turns around going ahead.
Yeah, it will be quite something if they are able to achieve that net debt zero status that the company has been saying about.
For a real estate company, that will be an amazing feat to achieve.
Definitely. The next stock on our watch list is Bandhan Bank.
Now, your favorite.
Yes, this seemed like a turnaround story, but the Assam floods have really put paid to the hopes. But for the time being, I would say the longer term story is still intact. The fourth quarter numbers were really strong, and a lot of it came from its commercial banking operations. The bank now is trying to gradually reduce its exposure to the MFI segment, but things are looking up in the MFI segment too. Collection efficiencies had been rising both in West Bengal and Assam. Assam now that is expected to take a hit according to analysts tracking the stock. However, if you were to look past this temporary, this short term glitch, probably the story about Bandhan Bank, an improvement in its asset quality and to be driven largely by its commercial banking operations, that is something to keep an eye out for. MK is positive on the stock. It has raised its earnings estimate for Bandhan Bank for FY23 and FY24 by 16 to 17%.
Santo, I think if investors in Bandhan Bank are looking up, they are clearly seeing grey clouds on the horizon. I mean, the Assam business, I talked, earlier, probably earlier this month or last month, we had talked about Bandhan Bank on the show. And I told you that the Assam business has always been the Achilles heel for the company. And clearly the flooding, the unfortunate flooding that we have seen in the state has now become a risk factor for the company. Assam accounts for a big share of the overall loan pie and the revenue pie for Bandhan Bank. And clearly collection is going to be dented there because of the flooding situation there. If you look at what Jeffries had to say, they believe that the higher credit costs in Assam could affect the profit before tax of Bandhan Bank by as much as 5% in FY23. So clearly a lot of the earnings estimate that were being built up will now have to be downgraded going ahead. Excuse me. Apart from that, you will probably see the worst impact of that flooding in the June quarter itself, given that this is the one quarter that will be probably the worst hit, and then you could see some spillover effects in the September quarter. So already in an FY23 earnings revival story, 2 quarters are already taken away because of the unfortunate incidents in Assam at this point of time. So this is one stock, Santo, I mean, it tries to look up, but every time, something or the else comes on the horizon. Before COVID, it was, there was a revival hope that, the economic slowdown will now reverse, and then we were struck by COVID. And then last year, the same situation happened. Although the broader economy was reviving, the microfinance book was not reviving at all. And now clearly when all of that is behind it, we have this situation in Assam. So clearly, probably you could say that it's a little, out of luck at this point of time, but the stock performance is going to be under pressure in the near term.
Maybe it could be an opportunity for the long-term buyers. You have got a bad market condition, also bank-specific problems. All this could probably create a real attractive price.
When a bank gets attached with the tag of becoming the next HDFC bank, I sometimes become a little skeptical of such banks. But that said, that is just my opinion. Anyway, one stock that I'll be looking forward to is KEC International. The stock could be in for a good show today with a 1,000 crore order win yesterday. Now, it expects to see about 20,000 crores in order inflows in FY23 and expecting to, see some margin bounce back into double digits by FY24. But before that, let's take a look at the market, and clearly it has been a very strong start, Santo.
Yes, 110 odd points up on the Nifty and very solid market breadth as well. Close to 1300 stocks trading higher and 400 stocks down over the previous close. Strength in Nifty Bank as well, it's up close to 1% in early trade. In the mid cap also you're seeing some good strength. The Nifty mid cap 100 is about 1% up. Eicher Motors, Hindalco and ONGC are among the big gainers, as is IndusInd Bank, Tata Steel and Bajaj.
Yeah, Tata Steel is up about 1.6%. If you look at some of the other performance, Power Grid is doing quite well at this point of time. Coal India is higher again, 1.3. A lot of the commodity stocks that took a beating yesterday clearly are making a comeback at this point of time. Also because a lot of these stocks were the one where the stock, your short positions were quite high. So clearly a bounce back would trigger some bit of short squeeze in stocks like these, and we'll have to see if this sustains towards the end of the session, because yesterday also we started on a positive note, then ended up erasing all of those losses to ultimately close in the green. So it will be interesting to see how the session progress is going ahead, but clearly at this point of time things are looking quite good even on the Nifty Mid Cap, which is higher by about 1%. So Santo, coming back to KEC, Cholamandalam Securities had a very interesting thing to say. So, just to remind you that KEC International's margins touched almost a 7-year low in the March quarter, clearly because of the high costs that they are facing in terms of raw materials. Now, Cholamandalam believes that going ahead, as the business diversifies even more, that margin will again come back into the double-digit territory by FY24, clearly because a lot of the orders which have high margin will be executed in that year. So clearly that is one upside for the company. Apart from that, they are trying to diversify themselves out of the T&D business or transmission distribution business and into other more lucrative areas in terms of order inflows, and this is something, along with their strong execution trajectory, Santo, I think this is one stock that could be in for a good times given the capex theme that we have been talking about for the next 2 to 3 years.
Well, possibly. My only concern about the stock is that so far the track record of its operating performance has been quite patchy. I'm just taking a look back at the last 5 years earnings, just about a 10% growth in top line, and compounded, the growth in bottom line has been negative. Given that, a 23 times
but that's
trailing,
expected, right? I mean, the past 10 years have been a sorry state for capital good companies and these sort of companies. So, I mean, it will be very unlikely to expect them to be outperforming in that sense.
Well, maybe true, but even within sectors there are always companies that still manage to kind of put a better performance, and KC so far has not been a market favorite in that, but things could improve going forward. Maybe now is the time, but I would rather give the stock a pass.
Oh, okay. I don't think I'll be able to convince you on this one, but I think the performance will ultimately speak for me.
Yeah, Indian Hotels, the last stock on our watch list for this morning. Now, again, it's a play on the reopen trade, and there seems to be buyers at lower levels for the stock. Good strong balance sheet, CJ. The company has set very ambitious targets for the next couple of years. Also, it's looking for at least a significant improvement in its operating profit margin, close to about 30%. Now that's quite something. Among the most best, and the balance sheet is quite strong. Also, it's a dominant player in the sector. So clearly, whenever there is a recovery in the economy, Indian Hotel stands to gain the most.
Let's stand to 2 points on Indian Hotel. Clearly, if you're looking for opportunities in the short term, Indian Hotels will probably not be your best bet, given the technical setup for the stock is clearly very, very, very bearish at this point of time. From daily point of view, from a weekly point of view, the technical indicators are clearly suggesting that the stock is likely to head lower or be a sell on rise at this point of time, because a lot of investors who have made money on Indian Hotels would like to book some profit on the counter, given the sort of mayhem that probably other parts of the portfolio is taking at this point of time. Apart from that, from a longer term trajectory, clearly there would be some concerns over the earnings performance in FY23, Santo, because now there are rising fears of economic slowdown, a broader economic slowdown at home as well, not to forget abroad. So a lot of the, the hope for tourism, global tourism to come into India with the restrictions being now removed, that could possibly temper a little bit going ahead. So therefore, that is for me remains a key risk. Apart from, besides the fact that high inflation at home clearly could have an impact on discretionary spending going ahead, and vacationing and holidaying have always been discretionary spending. So clearly this is one, counter where, although the narrative is quite strong, I just would probably want to see some execution happening going ahead, because the March quarter also was not as great as a lot of people were expecting it to be.
June will be really good. Trust me on that.
Let's see. I mean, we are just a month away from the earnings season. It will be interesting to see, and that is why I'm saying I think the market will only reward the stock, and not only Indian Hotels. I think any stock at this point of time will only be rewarded on the basis of performance. There no longer stories are not selling anymore in this market. It is only performance that counts for.
So when the first quarter numbers are good, the valuations will start to look very.
I'm sure. I'm looking forward to you talking about it after the first quarter numbers are right, and we'll see whether I am right or you are right.
Well, that's all that we have this Tuesday morning. Thank you for watching Markets with Santo and CJ. Do let us know what you felt about the show. There's a comment section below. Please do post your feedback in that.
And do follow us on the social media links at the bottom of your screen. And as I don't need to say this, guys, for all your financial news, stay tuned to moneycontrol.com and the Money Control app. We will catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.